When interest rates go from zero to negative in a country, how does that change the way that you value a company or a stock? Do you choose a high valuation because the discount rate is low? Or on the other hand, do you choose a low valuation because the cash flow is likely to be poor?
Well, going from, which we haven't done in this country yet, but going from 0 to -0.5 is really no different than going from 4 to 3.5. It has a different feel to it. Obviously, if you have to pay a 0.5 point to somebody, but if you have your yield or your base rate reduced by 0.5 point, it's of some significance, but it isn't dramatic. What's dramatic is interest rates being where they are generally. I mean, whether it's 0, +0.25, -0.25, +0.5, -0.5, we are dealing with a situation of essentially very close to zero interest rates, and we have been for a long time and longer than I would have anticipated. The nature of it is that you'll pay more for a business when interest rates are zero than if they were like 15% when Volcker was around, and you can take that up and down the line. I mean, we don't get too exact about it because it isn't that exact a science, but very cheap money makes me pay a little more for businesses than when money was at what we previously thought was normal rates, and very tight money would cause me to pay somewhat less. I mean, we had a rule for 2,600 years that Aesop lived around 600 BC, but he didn't happen to know it was BC, but you can't know everything. And it was that a bird in the hand is worth two in the bush, but a bird in the hand now is worth about 9/10 of a bird in the bush in Europe, because it depends on how far out the bush is, but it keeps getting worth less as you go along. So these are very unusual times that way. And if you ask me whether I paid a little more for precision cash parts because interest rates were around zero than if they'd been 6%, the answer is yes. I try not to pay too much more, but it has an effect. And if interest rates continue at this rate for a long time, if people ever really start thinking something close to this is normal, that will have an enormous effect on asset values. It already has some effect. Charlie?
Yeah, but I don't think anybody really knows much about interest rates. We never had them before. And we never had periods of stasis like 20, except for the Great Depression. We didn't have things like happened in Japan. Great modern nation playing all the monetary tricks, Keynesian tricks, stimulus tricks, and mired in stasis for 25 years. And none of the great economists who studied this stuff and taught it to our children understand it either. So we just do the best we can.
And they still don't understand it.
No, and our advantage is that we know we don't understand.
It's interesting though. I mean, we are, it makes for an interesting movie. And it does modestly affect what we pay for businesses. I don't think anybody expected it to last this long, do you, Charlie? Virtually.
I don't think everybody, if you're not confused, you haven't thought about it correctly.
Yeah.